How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest in real estate and create passive income and generational wealth. I'm your host, Doron Nissim, and today I have the pleasure to welcome our guest, David Weinstock. How you doing?
Thank you. I'm doing great. Thank you for having me on today.
You're welcome. I'm delighted to have you. David has been a real estate investor and landlord and a developer for the past 20 years. He has experience as a landlord and investor and currently a full-time real estate professional, running a small private equity fund named DW Capital. Prior to doing the real estate, he was involved with a number of successful technology and management consulting startups. And over the last 5 years, Mr. Weinstock has done a number of development projects, ranging from condo conversions to teardowns and ground-up luxury condo buildings. Wow, I would love to hear about that. How are you doing, David?
I'm doing great. Hearing you say that makes it sound way more impressive than it feels or where I'm at. But thank you for all of that. And it's funny. I've probably been in real estate for 20 some odd years, but it's not. I just want to full disclosure. It hasn't been a linear progression. I did my startup jobs while I was trying to do real estate, and then the real estate stopped for a while. Then I did another startup, and that was only the last 7 years when I finally was able to dedicate and kind of get away from the W-2 and then become full-time in the real estate investing front and the development front. And then about 2 years ago, actually formed the private equity company, and now that's beginning to grow it and scale up.
Wow!
But yeah, hearing your rendition is much better than that.
So 20 years in total. And then in the last 7 years, you've been full force into the real estate. And in the last 2 years, you formed your private capital fund. That's awesome. Exactly. That's amazing. So, tell us, how did you start real estate? How did you got into real estate?
By accident.
Wow.
I had learned that real estate was a good way to build wealth. I was in a number of startups doing a lot of traveling. And I was tired of paying rent to other people, especially if I wasn't there, and I wanted to buy something. And I'm from the Boston, Massachusetts area, and so people were buying condos at the time. And so I'm like, oh, well, I'll buy a condo so that I don't have to pay rent to someone else. A lot of our condos, because we're such an old city, are in converted 2, 3, and 4 family buildings. So they'll take a 2 or 3 family building, completely renovate it until they're brand new, and then sell you each unit one by one. So when I was looking to buy in my 20s, I used to play poker with a bunch of guys, and one of the guys was a mortgage broker. And so he, of course, volunteered to give me a pre-approval letter when I was looking. And so I told him the address of the condo that I was looking at. And when he gave me a pre-approval, he gave me 2 of them, one for the whole building and one for the condo. And I looked at the one for the whole building and I said, I think you made a mistake. And he's like, no. I gave you for the whole building if you're buying the whole 2-family, whether you're going to buy it a condo. I wasn't sure what it was, if it's a condo or a 2-family. And we had this long discussion of this 2-family was 2 times, 3 times as much money as I thought I could possibly afford. But he explained the mechanics of how when you buy a multifamily, that the rents of other units count towards your income and you're able to qualify for more. And so the wheels started turning really, really quickly there. And again, I was in my 20s at this point. So instead of buying that single condo, I wound up buying a 2-family. And that is really what kind of got me hooked and kind of started my interest in career in real estate. And then, of course, once I did that, I had a college roommate move in. We renovated while we lived there. We moved downstairs. We did the same. And then I said, this place is too nice for me. I'm going to move out. And my roommate wanted to stay. So he got a new roommate. I went on to do it again. And, off I went until, full-time 7 years ago, and then I started doing bigger stuff. But that was the one hook that got me and kind of taught me about real estate.
Wow, that's a great story. Getting into real estate by accident, by somebody that's actually in the business, kind of mentoring you into buying something bigger, it worked for him because you applied for a bigger loan, but it worked for you because you got into the business.
Yeah, well, I was fortunate that I had a couple people like that in my orbit. I'm actually really envious of anyone starting real estate now, because things like Bigger Pockets and podcasts and this sharing of information didn't exist. And so the fact that I found out from a poker buddy that I could buy my first multifamily was mind-blowing to me. It was fabulous. Today, knowledge at your fingertips, and it's really just about trying to figure out what's your first step and how to kind of get moving. So I'm very envious of folks starting today, maybe a little jealous.
Yeah, I mean, right now information is everywhere. It's just so easy to start in real estate. Yeah. So in your 20 years of doing this, did you have a moment that you said, this is what I want to do, and I'm going to focus into real estate, I'm going to do it, I love this?
It's funny. I got the bug early, right when I figured out the economics of that first two-family, and I went from one two-family to another two-family, but then it kind of ground to a halt, because the only thing I knew at that point was whatever money I could save, I could put into buying it, but I didn't really understand refinancing. I didn't understand how to use other people's money. And so it really ground to a halt and didn't really connect for me for the longest time. So I'm not saying that I had a laser line focus, but I knew I wanted to be in real estate, but I really got stuck for a while. Flipped a house, did a few things on the side, but I was focusing on my professional career. Trust me, if I knew what I knew about now about passive investing, I probably would be way beyond where I'm at today, just because while I was doing all the startups and the work that I was doing, all that extra income that I had, and I was kind of stacking away, it would have actually been earning for me, where instead it was not, it's being spent.
Right.
But I think, the big turning point was when I left my full-time corporate job. I became a developer. And so I was doing condo conversions for myself and then building ground up things. And then I started buying apartment buildings. And I think that's where I really kind of got the bug, because just the whole business of real estate is fascinating, and it's exciting. It's very people centric about what you're trying to do. And it has a finite start and an end to what you're doing. And I just loved it. And again, I certainly had my bumps and bruises, and I learned a lot by doing. And I'm a very much a type A personality, so I have to learn each piece of it. I've got to touch it before I can let it go and let other people do it. You don't want me swinging a hammer, but I do know how a house is built. And I think that's really where I got the bug and really kind of figured out that this is it for me. And I think I've had multiple chapters and transitions. And the one that really stuck for me a couple of years ago when I kind of formed the private equity company, DW Capital, was I had lots of friends and family that wanted to invest with me. They wanted to see what I was doing. They wanted to put some money at play here. And so I would use the majority of my capital, and then whatever was left is I make room for them. And I realized that what I was doing, one, I really liked it and I loved it. Two, I wasn't working a full-time job and I had capacity to do more than I was doing, but I was constrained by my own capital. And then I realized that I'm providing them an opportunity to invest, and I'm getting the opportunity to do more projects, which I enjoy doing. And that's the real epiphany for me. So I don't need to be the sharpest end of the stick being the lead developer, but I know how to talk to developers. I know how to underwrite and check if projects are good. And so I tend to be a really good B-roll for people. So they find something, they think there's something here, they're not quite sure. I can help validate that, structure that, and then put it together. And I love putting the deals together. I mean, if I've got two superpowers, it's solving problems and relationships. Those are the things that I love to do the most.
Right. And in real estate, those are main things that you need to have: finding the deals, solving problems, because there are always problems. And you touched on 2 points. One of them is you got stuck in one point. And usually in real estate these days, you can find a mentor that can help you to solve a lot of the problems that you have and move forward in your real estate journey, basically.
I think everybody has a learning style. There are certainly some people who can read a book and just kind of put it down and execute it, but the majority of us, it requires finding our tribe. It requires finding people around us to lift us up and support us. And whether it's through, a mentor, either a paid mentorship, and there's some great folks that are teaching systems and providing, the right network, or building your own set of relationships. This is this is an industry that you go farther with more people around you than you go by yourself.
Yeah.
And as soon as people understand making room for others to lift all boats, it gets really fun.
Right. Real estate is definitely a relationship business. You got to have a relationship with people around your network of people to help you build a business and do more and learn more and see what others are doing. So, I mean, always be networking. That's what they always say.
Always be networking, for sure.
Yeah. You talked about ups and downs in your business. Is there a specific deal that you wish you didn't do?
I don't know that I have a deal that I wish I didn't do, because each deal has been educational. I think the fortunate piece in my trajectory is that it's been paid education. I've made mistakes and maybe not made as much money as I thought I would, but I learned so much. Usually you've got to pay to go to college.
Right.
In this case, I was paid to go to college. I think the very first deal when I left my corporate job is a prime example. We bought a two-family property. I bought a two-family property with a couple of guys, and we were referred to a contractor who was way too cheap and way too eager for the work. We gave him a nice deposit, and he had performed for other people before, and nothing happened. And after about 6 weeks of waiting, we complained, and he said, "Oh, it's really a big job. I need a little more money." And we gave him a little more money. And again, this is a long time ago, but I waited and nothing happened. I said, "You know what? Either you start next week, you bring the money back, or I'm suing you." And so lo and behold, the next week, a whole bunch of guys descended on the building. They gutted the whole thing out, and it was a huge demo. Everything was gone to the studs. And right after that, I got a call from the city and a notice on the building for doing work without a permit. Contractor, nowhere to be seen. Short story long, we had to sue the guy. He tried to open up a restaurant with our deposits, a couple others, and just thought he would catch up later once the restaurant opened, and it didn't happen. And so sued him, got about 70 cents of the dollar back from him, but we hired another builder. We actually partnered with him. And again, this is where it was paid education. I was not so trusting at this point. Although I checked this guy's references, guy was a big builder. He had logos on his trucks. He was, the real deal and not, Johnny Six-Pack with, a pickup truck. And I showed up to the job site every single day. And I asked a lot of questions. I went into the building department with this guy. I went to the planning department to check things, and I learned a lot. And that really got me started my development career, because I learned all this from soup to nuts. And so now even when I do value add deals in the apartment space where we're not doing major construction, I understand it. I'm not scared of it, whether it's deep value add or light value add. I understand the numbers, and it's been invaluable. So those learning curve and those bumps and bruises, and trust me, there were days on that project I was like, what am I doing? Why am I here? But again, we finished it up. We sold beautiful townhouses, which is what we turned them into. Probably made 30% on our money, which again, quite good. It was supposed to be much higher. But everybody was happy. I was happy. I learned, and that was, every deal did better since then. But again, paid education, just fortunate that was so forgiving. I do think the one thing I'll say, you have to go in being a little bit of a cynic and a little bit of a pessimist when you look at your first deal, and make sure you're giving yourself a lot of room for mistakes. This is something that I explain to a lot when I'm buying a property or whatever. I have this whole spiel, but basically it says, I may not be perfect at my business, so I can't pay the highest price for it, because I need a little room on the price in case I make mistakes. And when I put the rent in, I have to put it a little lower than I really think it is, because if I don't get it, I need a little room to make mistakes there. And the list goes on and on and on. But really what it means is what everyone says, you need to have conservative underwriting, give yourself some room to make mistakes, because no one project goes the same as the next one.
Yeah, exactly.
You got to give yourself some room.
And it's funny that you say that right now, when you go into a project, you got to be more conservative, because when I sell properties, when we do wholesale properties, and I see the newbies coming into the property, they'll pay whatever you want for the property. But when you have somebody that's seasoned, somebody that's in the business for a long time, they're always going to give you the lowest price, because they already know that it's going to cost much more than what you think, and it's going to take much more time than what you think. So they take everything into consideration, and that's, from experience. It's always more expensive. Renovation is always more expensive. It always takes more than what you initially thought. So
yeah, well, I think experience is important. I mean, nobody starts at the beginning, but again, surrounding yourself with a team, having some reserves to make some mistakes, that's part of what we do.
Right.
I'm thankful for the experience I have, but yeah, I mean, I don't, to this day, if a deal looks like it's light, I just won't do it. I don't need to do the next deal. It has to be the right deal, because I have investors now. And so they have to come first. And so if the deal isn't good enough for the investors, and again, I invest along with them, it's not worth doing. There's always another deal. There's always another deal.
Right. So there are two things here. I mean, one of them is that you manage other people's money, and you got to be more conservative, and you got to be more cautious, because it's not just your money. If you lose your money, you lose it. But if you lose other people's money, that's a bigger story. And the other thing is, when you go into a project and you don't have the experience, you can always partner up with somebody that has the experience and can tell you and can, mentor you through the projects, and even be a partner on the project. And that way you kind of like go smoothly into the deal.
There's always room on a deal for experience.
Right. Yeah, I love that. You always learn. It doesn't matter if it's your first project or your 10th project or your 100th project, you're always going to learn something.
I'm still learning, and I've got partners that are in their 70s and have built thousands and thousands of units, and they're still learning on their deals.
Right.
That's what's so wonderful about this, and keeps it interesting. Each deal's a little bit different.
Yeah, keeping you on the edge.
Yeah. Well, but you learn how to navigate them. That's the difference. The deals are different, but your ability to navigate the unknown gets easier. You know how to solve it. You just need to bring the right people in.
Yeah, exactly. So in today's market, interest is going up, the real estate prices kind of cooling off and things like that. Are there any specific things that you do to mitigate risks in your business?
Yeah, I mean, I think it goes back to some of what we're saying about being conservative in your underwriting. It's not just a catchphrase that everybody says, but people need to actually do. So we write in a lot of room for error, which means if our deals can't pencil and do well with those, we just don't do them. I think, if you're looking at new development deals, we won't buy the land already entitled and marked up, because it doesn't give us enough room to make mistakes. So that's one thing on our development side that we are looking at. So it's very rare for us to buy ready to go land that's been marked up. The second thing is on all of our build costs, all of our reserves, we're increasing those to make sure that we have room for going longer. I mean, I've got a project that's a year later because of COVID, and is 20% more expensive than we started. We actually had to recapitalize the project, but we planned for it and we have reserves for it. I think that's really the keys here, and everyone's excited to keep doing deals. There is actually a lot of capital on the sidelines for good deals that are stable and have good operators. But again, thin deals, which, listen, 3-4 years ago, if you're getting into this business, or if you're syndicating and you're kind of younger, just kind of going at it, you could just buy a property, not even really execute your plan, and make your investor money, because the cap rates were compressing, the values were going up so quickly. That doesn't hold true today. And so again, you have to have a good, solid business plan. You have to have reserves, and again, just patience and the experience to get through it.
Right. I mean, 3-4 years ago, there are a lot of people that came into the space, and nowadays they need to refi and do things, and they're kind of stuck. So
I mean, I hate to say it, but we're actually looking at office conversion deals right now. So people who are on bridge debt that don't have a cap on their rate, that probably can't refinance out and be profitable right now, because they went from interest only and they're going to swap over. And so we see those as prime buying opportunities, and we'll convert it into residential or a mixed use project, should the opportunity present.
Right. In the office space, I think there's a lot of opportunity because of COVID and because a lot of companies went from working from home, they switched. So there are a lot of vacant office spaces, and I see it's an opportunity, even though I heard that people are, developers having trouble getting the right business plan to convert them. I mean, the numbers doesn't
As
really
I said, it
work,
has to be the right project with the right margins, because offices are trickier.
right.
Hotels are easier.
Yeah.
Hotels are already plumbed and have all the facilities to create studios or things like that in the rooms. Offices usually require upgrades of electrical, plumbing, and all that stuff. So it is an expensive piece, but again, right price, right place, right opportunity.
Right. Downtown, I heard the downtown office spaces are prime places for condo conversion. I mean, to convert it to condos. All right. So now we're going to move to the final round of 4 success questions that hopefully going to help our viewers to be more successful. You ready to go?
I'm ready. Let's do it.
All right. Okay. So what's your 3 best success habits that you have, if you have?
Time blocking. I try and hold my responses until I've actually had time to think through. So I am the king of writing a quick response, but then holding it if it has details in it. And then let's see, a third one. I write a to-do list every day, and I don't finish it, but I try and knock a couple off every day and keep building it.
Right. That's good.
That works for me.
Yeah. I mean, everybody has a to-do list, but they never get to it. So
as long as it keeps cycling, I just keep refreshing it.
Exactly. Yeah. All right. So the next one is, what's a good resource that you use in your business?
Let's see. For me, it's people. But what's been really great, started in COVID, but really picked up afterwards, is a lot of networking I do online first. So a lot of Facebook communities, masterminds, groups, really great way to kind of find a self-selected crowd of people that are working and trying to figure it out. And then I'll kind of convert that into kind of one-on-one meetings and eventually in person. I'm still old school that anyone that I'm going to work with, I want to meet in person and establish a relationship. But yeah, I mean, I'd say honestly, one of the biggest tools is Facebook.
Yeah. I mean, you touch on 2 points. One of them is the network, and the other habit that you have is meeting face to face. People don't do that these days, but it's a great thing to meet face to face and see if things are aligned and you're going to work together. So I like that.
Well, I think there's a big differentiator. People can look a certain way on social media, which is great. I mean, it's a great tool and it works really well. But it's also, there's a lot to be said when you actually meet someone in person.
Right.
And so you want to establish that rapport because, and again, this is more for me, but I'm very relationship driven. So the investors that are with me, they don't come in for one deal. I mean, they've been doing deal after deal after deal, and they continue to recycle and grow that investor base. And the folks that are now partnering with me on the deal sourcing side or my sponsorship team, they're folks that we've not done one project, we're 2, 3, 4, and continue to look together. And I think having that like ongoing machine of folks, that community, is really what makes us successful. So for me, it's anytime I can establish a one-on-one personal relationship, the better for me. It makes me happy. It's what I like doing. And I think it's how we build trust and rapport and credibility and how we have long-term paths at this.
Yeah, definitely. So the next one is, what are your 3 tips for making money in real estate? What do you?
I mean, start now. Put one foot forward, do something that works for you, whether you invest. If you're busy and you've got a good job, start with a passive investment and learn what it looks like from that side of the world. If you are a first-time home buyer, buy up to a 4-family, and that's residential real estate, and you can live almost for free, kind of the way I started. That's actually the one nugget, if I could tell anyone what to do, is when you're ready to make your first purchase, buy at least a 2, 3, or 4-family. You have a low down payment. You'll never get such a low down payment as when you do that for yourself, and it will pay dividends for years and years to come.
Yeah, I love that. House hacking, they call it, right?
Yeah, is now. And here's the funny thing. If you can't go for multifamily, I met this gentleman. It was fabulous. In his young 20s, bought a house. And I kid you not, he lived in the laundry room and rented out all the bedrooms. But that worked so well. He was able to buy a second house and upgrade to a bedroom. So when you're young, you're going to get roommates anyway. Great to be the owner, even if they don't know you're the owner, and house hack that way.
Oh, I love that. That's amazing.
People are very creative, but that's the way to do it.
Exactly. I mean, don't be lazy. Do what it needs to be. So the next one is the last question for the day, basically, is for people that have full-time job, but they want to invest in real estate. They have no time. They can't source deals and things like that. What's your advice for them to do? What can they do these days?
Yeah, I think that's probably Square. That's a perfect fit for private equity. That's a perfect fit for syndicated deals and for funds like mine. Whether it's my fund, I focus more on kind of the middle market, the under 150 unit buildings. But that's a great way. You get some passive income. You get to learn what it looks like. But you don't deal with the tenants, the toilets, or any of the things that go with it. You just get a check all the time. And there's a lot of operators out there. There's a lot of groups to choose from. I think the most important thing is find someone that you can communicate, has good relationship skills, and has really transparency in what they're doing. I remember I've invested with other people before I was doing my own things, and I still invest with other people when I have, little bits and pieces around because I like the projects they're doing and I have it to deploy. But for me, I've also had some really bad experiences that things look good on paper, but they didn't communicate. They didn't follow up. They didn't provide transparency. And, this is your money, hard-earned money. And I think that's the key piece. But for anyone starting out, put your chip in the game now, find a good operator that you trust and you want to work with, and just keep learning and seeing how it goes. I think you'll do very well.
Right. Yeah, the opportunity of investing with other people that has experience, syndicators, real estate groups, that's a great opportunity these days. Yeah. All right. That was great. Thank you so much, David. This episode was awesome.
It was a privilege being here, Doran. Thank you so much for having me. And I wish you continued success.
Thank you so much. It was a great episode, and I'm sure our listeners will like it. So, David, for people that wants to get in touch with you, how can they reach out to you?
Yep. The best way to reach me is check out my website, which is DW Capital LLC, or investwithdw.com. Sign up for a newsletter, email, phone, all of it's good. I'd love to hear from anybody.
Awesome. Thank you so much. And talk soon. We'll be in touch.
Sounds good. Thank you very much.
Thank you.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.